So let's look at the structure of SAU USD on daily time frame. And after critically looking at the structure, to avoid oversight, it is best to see the daily interpretation followed by weekly. And on daily time frame, it's very clear to see that the two corresponding highs has not been breached, which should have been a technical sell confirmation. But as long as this stands firmly on daily time frame, buyers still hold the market actively. And you can see what happened by close of Friday. Market dipped itself into a strong resistance roof, a previous high, breakout of structure, followed by a retest, rejected it, and trading above the red ascending trend line ATL. On technical, that remains a, a buy floor. So as long as that floor holds, price will continue to leverage on that floor as a demand zone. And another perspective to this, where we're looking for a sell correction, which I know the market will not move linear, the market will seek for correction. I'm seeing a temporary correction on this roof as market has respected it. So let's see if that happens. Let's see if that happens. That's a roof. That's a roof I'm expecting. I'm expecting a sell on that roof. Look at the price action from here. And if you trace that price action, you will see that in time past here was resistance, and if you take away this stuff, you see here's another resistance, breakout of structure. Here is a demand floor. After creating two resistance structure, breakout of structure, here becomes a demand, and here is a demand. You can see here you have here demand after two ROS structures, and price came back here to retest it to confirm that that first retest was valid. And to put it into context, you will see we have two retest floor, demand floor one, demand floor two. And when we had a breakout of structure, price came back here by daily candle close to initiate another demand floor. We have here demand, sorry, resistance structure one, and another one resistance structure two at this level. So technically, I want one more push, which is still in line with our earliest structural charts which we already sent. So one more push daily candle into the structure, most likely seeing the yellow metal pushing to 4,700, 4,690, and I expect that anything on that zone could technically constitute a drawback. The market will not move in one direction. The market will not move in one direction. So it's technically still calling for correction, and it's calling for correction. So technically what we want to see is a push into that structure. If we get a one more push into that structure, then most likely that everything we have asked for is what we are going to get. 4,747 could be a drawdown. So this is the structure, and shortly after I'm going to look at a 15-minute time frame where I'll look at for cleaner alignments, where we hope that we'll get into this but I'm telling you for free, the market will draw down a similar candle like this. The way you see market draw a similar candle like this, the market is going to do the same thing on this same trend line. You see it. So let me put it into context so that it becomes very clear and evident for anyone to see. The market has a drawdown candle here on a daily time frame, and it came here and drew down one simple candle. So technically what might happen is that today might be a complete buy candle which will be rejected on that roof, but tomorrow it will draw down a heavy candle. If it fails to do so, then it shows that institutional buying has gone bizarre. Sometimes it happens. The geopolitical tension heating up in Iran, the regime could be down any moment. And if Ayatollah's regime comes down, I will tell you for free, the price of the lustrous yellow metal will surely skyrocket. But at the moment, the market is hitting 4,700. And if we're getting into 4,725, you could likely be seeing a sell from that zone. So my projection on the daily time frame using my vertical daily candle rule, since I already have an ascending trend line which is valid based on line chart close, we have here as a resistance structure one. Let me put into context. We have here as a ROS one. We have here as a ROS one. ROS one resistance becomes support and break of structure one on daily candle. These are line chart candle close on daily. We have here as another valid ROS. We have here as break of structure. Price returns here as RT slash SR. Support become resistance on daily candle. The same on the same ascending trend line ATL. We have a break of structure and we have a retest. And you look at it after the structure was broken on daily time frame. You can see a weak candle return here. Weak candle one, weak candle two, also creating an SR level. Also creating an SR level on daily time frame. So also affirming that this ascending trend line is a valid ascending trend line. And if you look at what transpired after that, you find out that it was still in line with our expectation. So when price came there, bounced on it on the demand floor, creating an ascending trend line. That impetus couldn't have happened if we didn't have SR1, ROS1, ROS2, and one SR here. So the 3 points has given us an ascending trend line impetus. And when price came back after breaking that structure, it came here, confirmed it on a daily time frame. So you see it on a daily time frame, price came touch that, you will see the daily candle and sell down. When it came back again, it sold again. So putting more emphasis on this ascending trend line. So technically, if price moves there, where do we have a vertical line? We have a vertical line, and we'll look at where it crossed with that structure. That's an expected sell zone for today. So this is 4,728. I expect gold to drop from that level on technical. Yes, on technical, because if you look at the price action, I mean, you don't need to be in doubt. But if you have a divergent view, come to the comment section. Let me know your divergent view. Because look at the structure once again, ROS1, ROS2, on line chart close, on daily. And if you take it away, you see the corresponding week still fall within the trend. But the key things have given us the trend impetus are on the line chart close, we have here as a ROS, we have here as SR, and we have here as another ROS. And this is not just R, this is ROS RT. After break of structure, that is a retest candle to a broken structure. What structure was broken? A breaker from an ascending trend line. Price came back here for retest. So that's a technical RT ROS, which is different from the previous ROS we have. So if you put all into summary, RT and with the previous 3 ROS structures we had, we now have a trend impetus. So you can stand on that trend to affirm that the price will return back. And what happened? On that premise alone, you see when price return again, price respected it again. So we had 2 RT ROS, RT ROS1, RT ROS2, and we have 2 ROS level, ROS1, ROS2, and we have here RT SR1 and the 2 RT. So you look at another one again. So we have here 2 RT SR 1 and 2. We have RTROS 1 and 2. If price returns here on daily time frame, we could see some rejection at 4,728, 4,730. These are expected zone where I expect that market should begin to look for correction on daily time frame. So the importance of anchoring on a daily time frame, it gives you a clearer bias. So let's see what the range could do: 4,728, 4,739 to constitute a daily rejection, and where we see if we can have another drawdown heavy candle like price has done in the past. So I'm going to drop that sell idea in that zone 4,728, 4,739 is my expected risk zone where I expect that the market should seek a temporary correction in line with the principles of price action. Market never moves in one direction. There is always impulse correction. So bye for now.